Well, hey, this is George Roberts. Welcome to our first shot at something new that we're doing called Tech Talk. And Tech Talk is meant to come at these webinars from the point of view of providing you more information about the underpinnings of some of the many features that we have. And we started it out for the first month with doing all the VTA indicators that we recently put up in the last 2 or 3 months. So the first one today is going to be on the VPA. You won't find these talks to be totally inclusive of everything that you can do. They're meant to be very focused, very specific. Q&A will take place at the end where you'll be able to talk to Ron or be able to talk to Matthew. During their presentations, we wanted to kind of keep them where they can stay on track to tell you what they have to tell you. You can type in your questions anywhere along the way. You just won't necessarily get a vocal response right at that moment in time. So that's a little different than maybe what you're used to. Okay, part one it's going to be a 20-minute presentation from Matthew Sarles. You don't hear from Matthew very much because he's always back there figuring out how to put something together that's even better than what we have right now. And for many of you, you don't realize it, that Matthew is actually an HGSI partner, so he's my partner. And then part two, Ron's going to take what Matthew has just shown and explain to you and show you how it's actually used in the application side. So you got the technical side and you got the application side. And then in part three, when we break off to that, there's about 30 minutes. Most Q&A always goes longer than you expect it to go, so I put it there as optional extension as needed. You may notice on your little control panel, if you look there right under where it says attendees, you'll see something called handouts. There's 2 handouts in there. One is the HGSI VPA Indicator Guide. It's a PDF. And the other one is the PowerPoints that I'm just running through here right now. There's not much on them, but I gave them to you anyway. But Matthew, I know, is going to be referring to that PDF, so you want to download that and have it nearby in case you want to make reference to it. So at this point, I'm going to turn it over to Matthew, and he will take over from here.
So can everyone see that? I can probably make it a little bigger if it would help.
I can see it, Matt.
Yeah, I can see it. Looks good.
Okay, so we're going to just do the VPA, and I'm going to start here. This is the default view in HGSI, and we're going to build a view, and I'm going to talk about what the options are and go over it. Now, all of this is covered in this PDF file, which is really detailed documentation of what this indicator does and how it works. So you really, if you've got a question about how this indicator works, this document really is probably the best tool for answering it. So, so let's start off. We're gonna make a new view. So I'm going to create a new view under my user views. I'm going to call it VPA. And now, the VPA indicator, unlike most of our indicators, it really works best on a black background screen. Most of our indicators, our charting was designed around white screens, but that's kind of gotten out of vogue these days. It's one of our older things. So the first thing I'm going to do here is I'm going to I'm going to change the colors so that they're reversed. So one of the things when you're using the VPA that I really recommend users do is they turn off the label window checkbox because the VPA indicator sticks text on the screen as you select different days. And if you've got the label window option turned on, then you get less screen real estate. Let me finish making this view and I'll make this window bigger. So right now I'm just reversing the colors. Now normally most people don't make new views from scratch. So right now all I've got is a default view and I've just switched it to black. And so to add the VPA indicator, now we have this new search thing so you can just type something. and I recommend you use it. Now you can trundle through and find the volume price analysis and find the VPA, or you can type VPA and bam, it'll show up really fast. Now the VPA options by default does not draw the price indicator. All it draws is the boxes around the price bar. And so let me show you what this looks like. And so that's what these little dots are. We're calling them flags. There are flags can appear above the bar, below the bar, or in the middle of the bar. They're colored, and obviously the colors work better on a black screen. The VPA indicator also has this text box by default that's turned on. Inside the indicator, if you go here and you edit the indicator options, this display the VPA analysis in the upper corner of the chart window. That's what this text box over here is. So if you don't want to see this box, you can turn that off, and it'll take the box away. The box generally, though, has useful enough information that I think most people are going to want it. The next checkbox controls whether the flags themselves are drawn. So it's entirely possible all you care about is the text itself and not actually seeing the flags. So we made that an option. The VPA analysis that shows up in the upper corner also shows up in the data window, inside HGSI's data window. But as you can see, there's a lot of text here, and if you've got more than just the VPA in your chart, you're going to need, you may not actually want this data to show up in your data window, which is why we have an option, so you can turn it off. I'll talk about the VPA signal stuff in a minute. You have to understand that when we first started implementing the VPA, we weren't really sure how well this would work for us. And so the script, the Amy Broker script we started with that defined most of the basic terms, had this concept of a different set of, a harsher set of rules for whether or not a day signaled for the back testing purposes. And so we've kind of split this up so that the dots themselves are called flags, and days where a significant event occurs with enough volume to back that up is called a signal. And so the charting will actually let you show the signal days differently, and the signal events also appear in the warehouse. So once you've got this up, it's pretty easy to see when you put the crosshair on a day, you get a report of the status of the day. Some of it's just basic date and volume information. The text box up here is the description of what the VPA flags on this day are, and it's pretty much an English version of what that event mathematically is. And so on this day, there was a high volume up bar closing on the high, indicating strength. There's also an effort to rise, and that's a bullish sign. And since a day can actually have more than one flag go off, this text can actually get fairly long, but it's rare. Usually only a couple of flags will go off on a specific day. And as you move the mouse, you can move the mouse with the mouse, obviously. You can move the crosshairs, or you can also use the right and left arrows to walk the mouse through the days. When you've highlighted a day, you can see also information about the volume, the spread, the sentiment, if you look at this, we have this in the PDF. Every one of the flags has a documentation, and then each flag also has a sentiment that's associated with it, whether it's neutral, bullish, or bearish. And that's what this the sentiment that appears here is. The spread and the close are explained here. It's basically a table. The volume, whether it was a low or high volume, whether the spread, meaning the high to low range of the price, and then where the close of the day occurred relative to the price, as well as this new sentiment thing, which we kind of invented to start to categorize these VPA events. Then the next two things on the text box are the major and minor trends. And so the idea here is most of the VPA trading philosophy is based on looking at the volume and adjusting it using what the price action was compared with the volume to decide what happened on that trading day. So a stock that moves up on higher volume is being bought, and a stock that moves down on higher volume is being sold off. The direction of the price movement and the volume together give you this picture of how the buying and selling of the stock is used. And so so one of the things that's important in working this out is this idea of having the trend. And so the VPA indicator actually uses two completely separate trend systems. This one here, it's called the RWI, major and minor and intermediate trend. It uses a random walk index indicator, which compares the stock's price versus what would have happened if the stock was moving completely randomly. It's a statistical measurement system that tries to, and then it's been fit into major, minor, and intermediate trends. This trend system was added to the Amy Broker script that we started with, but it wasn't really integrated into most of the flags. And so, as a result, almost all of the flags that have anything to do with trend information are actually using a separate trend system, which is based around best fits. And that's what the BF trend, long, medium, and short are. And those fields are also available in the warehouse as data fields so that you can filter on them. And the best fit is basically, it takes a 5-day moving average of the close, and then it fits a trend line against that moving average using a linear relative strength, a linear best fit, a least squares best fit. And so essentially it figures out the slope of the line through the 5-day, the 10-day, and the 40-day moving period of time, and then based on that it decides if it's an up or a down trend. And so every day on the chart has we compute the trend for the longer period of time, the medium period of the time, or the short period of time. And so you get a lot of days like this one here on Microsoft where there really actually isn't a trend. And the RWI trend pretty much tracks that fairly well. The best fit, it kind of varies from depending on how well it is. But it's really good for telling, the long-term trend is generally fairly good with telling which way it's going to go. And so as part of the VPA indicator, you can have the VPA indicator draw the price using its own special coloring rules. And that's what this draw the price using the VSA colors. There are really two sets of colors here. The VSA is more it's based on Trade Guider. It calls VTA VSA, and they have a trademark on the term, which is why we don't really use it. But their coloring scheme colors the chart based on the flags themselves, and it's a little confusing. I'm not sure I recommend it for most users. But the trend mode will color the charts so that basically down trends are red and up trends are green and neutral trends are blue. And that's what this best fit trend analysis is all based on. It combines the three together to decide on a color. And the PDF document has the best guide for how it determines what the color to use. So there are two coloring mechanisms. The trend one, I think, is pretty easy. You can actually see that it makes sense. The orange and red are going down. The green is going up. The VSA is based more on the flags themselves, and its coloring mechanism is a little harder to read. When you set up a chart with this, I recommend you remove the price and just use the VPA as the whole thing, because then it doesn't have to draw two copies of the chart, one with the colors and one without. You can get some weird artifact. I may be moving a little fast here, so there may be more questions. So when you have the VPA drawing the price bars, you pick the color. You can pick the type of bars you'd like to draw. Generally, bar charts, the high open, high low close is pretty common for this. This bottom section, which is the RWI trend analysis options, these control this RWI major, minor, and intermediate trend. It will also affect the flags, but I think only two of the flags in the entire set of flags uses the random walk for its stuff. So I don't recommend changing these default periods, but you can if you'd like to try to see how it better tracks the trend. So once you've set up a view like this, a couple of things that I really recommend users consider doing is adding a moving average to the volume, and you can do that by clicking on the volume window, switch to volume, 90 periods. I like a little bit lighter color personally. And then this puts a moving average down into this volume window section. I also like to change the volume to use the multicolor and a thicker line. So you get a little bit better, more obvious volume. And then once you've got a view like this set up, it's pretty easy to quickly see the events. The VPA, as a rule, and this isn't completely true, but mostly, when the flags are drawn below the bar, it means there's some sort of stopping resistance going on there. And then flags drawn at the top are generally peaks and indicate it's ran out of steam and it's going to go the other way. And it's not completely true, but more so than not. So when the VPA flag is in the middle, it's kind of an indecision point, which means the next couple of days are more significant. So, like in this case, there was an effort to rise, which is a very bullish sign, and then the next day it did actually rise, but the volume didn't really come in, and so it's not really a surprise that this didn't work out too well. And then the next time a signal shows there was no demand because of the volume. Most of these flags are created by combining simple volume rules. The difference of the volume compared to what the average of the volume is, and the price action between the close today and the close yesterday. And this document goes over in huge amount of detail what each one of these flags mean. And if you're curious about getting into that technical side of how these are done. But after a while of looking at these charts, I think you'll see there's patterns to the kind of price actions these VPA events signal. And it's not really a surprise that these patterns aren't coincidences. The price action that moves these stocks does tend to get flagged really strongly with the VPA signals. And then you can combine that with your other trading mechanisms, moving averages and crossovers, to find good entry points into stocks is part of the VPA philosophy. And I think Ron will probably talk more about how to do that. There actually aren't that many options. Let's talk about the signal days. So the idea behind the signal days, so there are 26 flags that make up the VPA indicator. And we were afraid that having 26 flags going off all the time would indicate you basically, every stock has a signal practically every day. And so the idea was the signal days would be days where the VPA flag was significant. So it is possible to have a VPA flag that doesn't have a signal, but there actually aren't that many of them as we thought originally. And so pretty much most days that have flag events, like here's one that this test for supply in an uptrend, it wasn't considered a strong signal event, and so it isn't a VPA signal day, but it is still a flag. It's still, it still met some criteria. It just isn't considered a signal day, and so we have this extra signal indicator. That's what these gray bars that you can see on the chart are. But as a rule, I think most users will probably be much happier if they don't use the signal days and just focus on the flags. The signal days are completely visible in the warehouse. In the warehouse, if you there are fields for the various VPA flags. And these only occur on signal days, but as you can see, the signal days are almost all of the days. So it's not as big a thing. The warehouse part, though, I think we're going to probably cover. Ron will maybe talk about a little bit, and we'll cover some more later on how to use this to do filtering to find tradable events from the VPA. So I think that pretty much covers most of the indicator options that I was going to cover.
Okay, your voice is breaking up a little bit there, but I think it's fine. Got a couple of questions. We're going to do a question and answer session later, and Pat will address that. Matt kind of did address all the VPA signals, but we'll talk about that. And yes, it can be run intraday, the signals, but you have to do a full update. But let me get on with this. Now, what I'm going to do is, this is a view of all the VPA indicators, and I just put this together today. I don't use this, but I just wanted to show all of the fields that are available. And Matt was talking about the sentiment and the signals and so on. Since he put this in, I asked him to put it in, and he did. It's the days since the last VPA signal, so I primarily use the last VPA signal condition and the description. Maybe not even the description as much, but I wanted the days since the last VPA signal so we would know how fresh the signals are. Yes, there are a lot of signals, but each one of these, well, I shouldn't say signals. I'm trying to remember to call them alerts, to alert me to something. Every time the conditions are met for an event, for a flag, it's going to signal. Now, we have ways to confirm these, and I primarily use the group if I'm looking at stocks. And because in my opinion, and I think most of you will agree with me, that the groups have a significant effect upon what's going on in the market. Now let's just, I'm going to, by the way, you'll see that all of these trends are up. This is a view that you actually have now. It's VPA trends. Let's see, they're down here, and I've got too much stuff in here. I need to clean some of this stuff out. But these trends I set up so I could look at only stocks that are showing a long-term trend, a medium-term trend, and a short-term trend. And I'm going to go into a gold stock since gold has been has made a tremendous move here. Now, what I've done today for this demo, I have a demo chart 1, a demo chart 2, where I removed the VPA information up here, but I used a warehouse field down here, and I put information in as an alternative. And then this one has a 5-day moving average on it. And this, if I get time, I'm going to show you how Matt determines his trends with the VPA trends. And it has a lot to do, well, it's based upon, I should say it's based upon this 5-day simple moving average. But we'll come back to that. Now, as Pat Turner was saying, yes, there are a lot of VPA signals, but each one of these is generated primarily due to the criteria. And let me just open this up and bring up a crosshair and move it across here. And if you look over here, you will see the trends change. Now, everything is up here. You saw that in the warehouse view. And these trends have all been up until I get down here. And notice that it was green up here and it's blue here. On this day, there was a signal or an alert. I'm going to try to use the term alert for an effort to rise as it was breaking here past resistance here. We had an effort to rise back here, but notice that it fell back. Now I'm going to go in, I'm going to right mouse click, and I'm going to edit. I'm going to edit demo 1, and I'm going to add an indicator. And I'm going to type index in here. I'm sorry, I don't want index, I want group. Lack of sleep again. Okay, so I'm going to put the group in here, and you have to use a private scale on this if you build your own chart. And I use the gray color, and I always use the dotted line. And notice that the default is current group index. This is if you make your own indexes and you want to compare this line to a folder full of your own stocks that has its own index. But I always use industry group index. Now when I put this on here using the private scale, you can see clearly how the group affects these stocks. Now back here, That might be a little light. Let me change that. I'm going to darken this. Is that too dark, or can you see the line okay? You can probably see it all right. If not, I'll lighten it again. All right, thanks, John. Okay, so up here, as I mentioned early on Barrick, there was an effort to rise, and before that, the group was going up, but notice that the group collapsed, and at the same time, the stock pulled back. Now this signal here, the effort to rise, this coincides with the group going up, so that is a much stronger signal. And look what happened with this. We all know what's happened with gold. It's had a tremendous run. I want to point out these two flags here. By the way, I don't know if you've noticed it or not, but I asked Matt to put zoom keys, shortcut keys in. And if you use your alternate key and on the keyboard use 1, 2, 3, 4, and 5, you have shortcut keys where you can move around very, very quickly. And since I use this a lot, I no longer have to right mouse click and go to the zoom and select this. Here are the shortcut keys right here. Makes it much easier to get around this program. Now let's go here and look at these flags. I'll put the crosshair on so you can see what I'm on. And notice that the signal was a down signal, effort to fall, and that coincided with the group going down. But it didn't go much further, did it? In fact, there was an update the next day on heavier volume, and then we had a signal, a transfer of ownership VPA flag. What's a transfer of ownership? It means that buyers are coming in to support this stock, and you can always tell that by the tail. Now, some people, when they talk about candles, they talk about tails and wicks. This would be the tail, and this would be the wick. I just generally call them wicks for either end. But what we're seeing here is we're seeing some buying support, because support pretty much held here, got a little bit below it, but there were some buyers stepping up, even though this volume bar was red. And then look what happened. This group started making headway to the upside, and then we got a signal here which was confirmed by the group. So this is why I really don't think you should look at any stock, if you're trading stocks, individual securities, without including a group line. And in all the charts that I've made up for you and posted, I believe that the group line is in all, if not at least most of them, and I think it's in all of them. But after watching this, you can add your own group lines. It may not hurt just for the practice or the experience of building a chart of your own. Then you get more of a feel for what's going on. Now, I want to go back over here, and when the first edition, or until recently, only the major trends would change when the cursor was moved. But Matt put this in, the best fit trend line, to correspond with the signals. Now, as he pointed out, I want the indicator, not the report. As he pointed out, you have options here. I generally use the trend colored price indicator, because since he gave us the ability to scroll back and forth and see what the trend was, I want to know what the trend is, rather than using the VSA colored price indicator. Now I'm going to just change it to this, and notice that this changes. This is based upon what the VPA signal is doing. I think it's much more useful, and this is a personal opinion. You don't have to agree with it, but I would rather have the trend indicator on here to give me a visual of when the trends changed. Okay, Stephen put a question up. If signals are significant flags, what do we need flags for? The flags, who knows what's significant, Stephen? The flags all indicate an event where the criteria was met based upon price and volume. Like this down here, as I referred to this, the transfer of ownership. Now, that may not be considered a significant signal, significant flag, but what it does is it gives us insight into what is happening on that candle. And it's an alert, and that's why I am trying to use the terminology alert rather than signals. I mean, that's the best explanation I can get you. The VPA indicator PDF is right down here in your handout window, Mike, if you look down at the bottom. If not, it's also in the help file on HGSI. Anyway, getting back to this, and let's go back and look for something else here. As you can see, all of these are bullish because let me just show you the filter. I'm going to edit the filter. And what I did here is you have the ability to go in and make your own filters. I have most of them in there if you just look through the files, but I wanted the VPA best fit trend long, up, medium, and short all up. And I just added this today, and when I put out an update again, I made sure that the 90-day moving average volume is equal to 100,000 shares because the VPA flags or the signals are not valid unless there is 100,000 shares traded. I'm sorry, 100,000 shares based upon the 90-day moving average. And Matt, if I'm wrong about that, just let me know, but I think that's correct. So on this demo chart, notice that I put volume and the 90-day moving average, and this blue line on this chart represents the 90-day moving average. So to get valid signals, if you get into stocks that have very, very poor volume, the VPA signals are much less reliable. So that's why I decided to put that in the candle or the filter. In addition to that, notice that they're all combo here, all the numbers are the same, 2676 all the way down. That's because I filtered the trends to be green, long, medium, and short, and even though I put a combo on here, it has no effect because everything is filtered and that obviates the need for a combo. Anyway, that's kind of beside the point. So what we have here is, I'm just going to go through a few of these columns. The days since the last VPA signal. Now this, I believe I have the intraday on here. And I want today's signal. So I'm going to go back here, sort. So the today's signal, or yesterday's signals are on the top. And let's just look at, I'll just grab one of these stocks randomly. Notice that I did not filter out the ETFs. They're coming through here also. I didn't put a common stock in there. So let's take a look at advanced. I haven't looked at this stock. And I'm going to take the crosshair off. But here was the signal yesterday. This represents what happened today. And notice that even though I have not run an update, that signal is generated today, intraday. So here was an effort to rise yesterday on heavy volume. Notice that the group line ends, let me do that again. The group line ends under this candle. The reason for that is I did not do a full update intraday. If I did a full update intraday, and by a full update, for those of you who may not know, what you have to do is you just go into update, you select update and include intraday data. You have to make sure that your intraday data settings are on, enable intraday, and just do a full update. So I would just check that and then start, and it would do a full update, and then I would get these signals generated intraday. Now, one thing you have to watch out, and not only would the signals be intradated, this group line would be updated, and if I ran that, maybe the group turned down today. I don't know. I won't know until tonight if I come back and look at this stock. But if you do run, if you have an SSD drive, solid state drive, it doesn't take very long to do this. If you have a regular drive, it takes too long to run an intraday update, so I don't suggest that you do it. On this computer, it takes 4 or 5 minutes to do everything and update the smart groups and everything. But what I was going to say, if you're going to run these updates intraday, I would do it late in the day because the volume really needs to be nearly complete to get valid signals, because things can change in the last couple of hours of a market day, as we well know. So this isn't a great chart, but it's been going up. Let me zoom out a little bit here. Now, these stocks obviously do not always follow the group line, but when you see a stock like this, and I consider this a pretty loose stock, and I don't particularly like to even look at loose stocks, but when you see a stock like this that is going up and its group is going down, then this stock has greater relative strength than its industry group, which is a good thing, obviously. And notice that it held up here while the group was going down, and then the group turned around and started going up, and at the same time it was holding up. There were some VPA signals in the immediate area, and then right here on this effort to rise, it broke past short-term resistance, and then when we get up here, there was another effort to rise, but it was rising into this longer-term resistance, pulled back a little bit, and shows a no supply, which is a sign of strength. The no supply is generated when a stock falls back on lighter volume, and it's in an uptrend, and you can see that here. The volume was below the moving average, and then it turned around and broke up with the support of its group. Okay, Stephen Cole has a fast machine. He can do it in about 3 minutes. Stephen, I probably have a lot more groups than you do that I index. But anyway, it's really fast, and you get great insight intraday. That's a whole other subject, though, and we don't have time to cover that. We're just talking about VPA today. I sent out a link today. I posted it on the bulletin board, and I sent it to my morning report subscribers. There is a video from Tom Williams. Of course, they're trying to sell you something, but Tom Williams was the first guy to computerize, not VPA, VSA signals, as Matt said. They have that copyrighted, but he hired a programmer several years ago, and that's where TradeGuider came from. Now, TradeGuider, I own TradeGuider, as I mentioned. and I worked with it for a long time, and then I started going to Amy Broker, because TradeGuider was written in the early 2000s, and it's very, very clunky. I mean, you can't do the end-of-day version. You can't do close to what you can do with this program, and the signals in that program are not. I don't think they're as good as they are in HGSI, to tell you the truth. But it's just so clunky to use. I didn't use it, but my point is, if you get a chance, go to the bulletin board and look at that video, that interview with Tom Williams, because it will give you a lot of insight into how he developed the program, or his concept of it. He didn't develop it. He's not a programmer. But why he wanted to computerize this, and ultimately it has led to this program and a few other programs that use VPA. Now, VPA, as you know, is a very hot topic right now. Suddenly everybody has discovered Wyckoff again after 100 years. And the reason for that is, well, I give Anna Coling a lot of credit for writing that book, but the reason that it is so important now is that nothing has really changed over the past 80 years, and it's all about price and volume. It's all about market manipulation, and it's all about seeing what these signals alert us to. Now, a lot of people would consider this area here very weak because this stock has come down, but it's actually showing strength right here. And if you listen to that interview with Tom Williams, he talks about strength. By the way, his favorite indicator he mentioned today is stopping volume. That is because stopping volume shows that there is heavy selling and maybe some panic. This is not a great stopping volume signal, but let me go back and find that. If I can. I can probably find a better example. Okay, this is not a great signal here, but this is stopping volume. As you can see up here, it normally indicates the end of bearishness, and it did temporarily, and this started to go up. But notice that the group is so important, as I keep hammering. The group held here, and then it went down, and then this stock started going up. But stopping volume happens. Let me get rid of this. It happens generally, well, it always happens on a volume spike because there is heavy selling where people want out of a stop, traders want out, and yet buyers are coming in to support this. This has two signals. It has stopping volume and a transfer of ownership. You can see the transfer of ownership right here. That means that support is coming in to this stock. So that's why it's his favorite signal. And like I said, this is not a great example, but he would say that this is a strong candle in this instance. I use candles rather than bar charts. I use both, but it's strong because there are buyers coming in to support it. Now, when you get up to the other extreme, where you'll see weakness, and a lot of times you're going to get these effort to rise signals here, but that can actually be considered a weak signal. Why is it a weak signal? Look at the volume. Now, this may just be a temporary pullback in this stock. We do not know that yet. But the further you get extended from where the accumulation area was back here, this could be considered building a cause. If you've ever heard that terminology, If you look at Anna's book or if you look at the Wyckoff documentation, there is a term called building a cause. It's building a cause to go higher, and then you get the effort. Here's the effort, and here's the result of the effort. So there's really just 3 or 4 concepts, and if you start looking for these, they become readily apparent to you. There's a question, can I schedule someone to review the features of the software? That's what we're doing right now. I'm thinking about doing a VPA webinar or a couple of them. I'd have to charge for them. I'm a user. I do most of this stuff volunteering my time, so it's pretty hard for me to take time out of my trading day to do that. But I'm considering doing just a modular webinar on VPA and putting this all together if people are interested in that. Okay, so getting back to this, I think we'll just have a question and answer session now. I should absolutely charge for it. You do enough already. Sign me up, says Andy. Well, all right. Go ahead, Matt.
So yeah, if anybody has any questions or something we didn't, I haven't done this before, so you're seeing the first kind of go at this, so it's a little rusty. So if there were things I went through too fast or something you'd like more detail on. Yeah, why we have 2 trend indicators? Well, originally, if you read the PDF document, we converted an AMI broker indicator to HGSI, and it had the 2 indicators. It's hard to tell exactly why, but it seems obvious that the best fit trend indicator system that most of the flags use, it's not always the best guide to what the real trend was. And I think they added the random walk index as a way of trying to get a more accurate version of the trend. But in reality, if you look at the code from the AMI broker script, it seems like they bolted it on. And so I actually think, they published it out into the world, but it wasn't really a fully baked thing. And so it's why all the flags are almost all computed using the best fit. The random walk is mostly just the text in the upper left-hand corner. It doesn't really control any other parts of it. I think the next step for this would be to hook that up more towards driving the flags and the indicators. But that work's not been done, and the indicators set for a while now, I think. I don't know, Ron may no longer, but
Bradley, they don't correlate. So I've pretty much gone to the best fit trend lines, and the reason I did that is because Matt put the ability to screen for those in the program. Now let's go to this demo chart 3, and maybe this will be helpful. And Matt, correct me if I'm wrong on this, okay? Now we have the long-term trend, the medium-term trend, and the short-term trend. See this line right here? This is a 5-day simple moving average of the close. And the short-term trend is based upon going from this point. It would have been, well, first of all, let me go in here and turn off the intraday, because I don't want today's bar. And if you turn off the intraday, that bar disappears. Okay, so now if I would select this point here and move back, I'm going to make this thick, and I'll make it green. If I move back 5 days from this point, so 1, 2, 3, 4, 5. That's correct, isn't it, Matt? And that would, see, I'm going from the moving average itself to this point in the moving average. That is what the short-term trend is. Now, if I take this back another 5 days, 1, 2, 3, 4, 5, and go to that point in the moving average, that would correspond, this whole area here that I've done so far would correspond to the medium-term trend. Okay? And then if I go back 40 days, and I'm just going to guess at this, I'm not going to count 40 days.
Yeah, and it's 5 days and 10 days and 40 days, including the last bar. So you gotta get the actual right count. I think that first one you did 6 bars, not 5.
Well, okay, I didn't know if I did.
But yeah, no, the idea is correct. And so then the best fit is computed against that moving average for that length of time. And depending on the slope of that best fit line, it's whether it's up or down. And in the VTA indicator, there's no such thing as flat. It's either up or down. There's no middle case.
Yeah, okay, I made a mistake, Matt. I said 5 days, and Bradley corrected me like he normally does. He says
Is it 3? Yeah.
3, 10, and 40. I was thinking of the 5-day simple moving average. Thank you, Bradley. That's lack of sleep again.
It's a very short best fit. That short one is actually too short, to be honest. I'm not really sure 3 is a great number, but the 40 is a fairly good best fit on the major parts of the trend. But you can clearly see in this stock the middle of this the stock started heading down, but it's still, the trend as a whole is still moving up. But in the back around the early part of February, it would not be wrong to say that the trend in that case had started reversing. It was heading south. So this idea of a best fit line to a moving average as being the best way to describe a trend, it's kind of, I won't say controversial, but it's not necessarily mathematically the best way, which is why I think they went with this other random walk thing. Now, one of the things, right now there's no way to actually draw the random walk index in HGSI, and it's on the list of indicators to do, so we'll add it as another charting indicator, and so you'll actually be able to see what the random walk index for these stocks look like, and that might change people's opinions of how good or bad that trend is. And so, we may need to evolve some of this VTA technology to filter out some of this. There's a little bit of evolutionary aspect to which of these things make the most sense. When the market's going up or down, it's easy to say the trend indicator works, but then the market turns around on you and you suddenly find your best fit thing wasn't working so well.
Well, I don't think you can really determine trends unless you look at it visually and mark it out.
It's really hard. And so these are tools. The idea behind them is that you can use them in the warehouse with filters so that you can just find a handful of stocks. I mean, none of these things will tell you every stock that's great, but if it can help you narrow the field fast enough that you don't have to spend hours and hours looking at hundreds of charts, when you can filter down 8,000 securities to 4, you've got a better chance of picking good entry points and trading.
Well, you know, I go through that whole thing every day. Stocks and groups moving up where the strength is, the top 50. I mean, you know, you can narrow the list down in a hurry. I'm just doing this randomly here. And let's go through a few more of these questions here. Gwen has a couple. Thanks, Stephen. Let's see, and I'm just going to go down the list here.
So,
Gwen, she wants to show where you went to the initial Windows change window. I think what that Matt did, or this up here, Gwen. You can do it a couple of ways. You can go in here to the chart view and make changes. Is that what you want? Well, Bradley, you can filter on stopping volume. We have a field for that. I'll show you in a minute. Oh, you already knew that. Oh, okay. Matt said Windows had to be shut off. Said a window had to be shut off. I don't know what you mean by that. Matt, do you remember saying something about that?
I also said Windows had to be shut off. Oh, I think I was talking about the label window option. So if you look at our charting, the way a chart view actually works, it basically consists of a number of sub-windows. And each window can have as many indicators as you want to stick in that sub-window. And each window, that's what the split bar between the price and the volume. The price is one window, the volume's another. And there's an option to whether or not to label those windows. And the labels are what you see in the upper left-hand corner of each of the windows. And when you bring up the options on the window, it has a checkbox for whether or not it gets labeled. So you can see in a view. Bring up that view again, Ron.
Okay, see, I took it off, Matt, and the label's gone.
So bring up hit the pencil and bring up the edit view. So inside the view, now go back one, close that window.
I want to bring the label back. Okay.
All right. So in this one, you can see Windows have the little icon that looks kind of like a window, and then under it are indicators, and those have a little icon that looks like an indicator. And so in this view, we have two windows. There's the VPA flags and VPA trends, and then there's the volume 90-day moving average. And so if you click on one of those windows, click on like the volume, click on that. So it brings up the options for that window. And the options for the window determine generic things like the color of the window, whether it's log or semi-log. You can also control the little horizontal lines that you can see in the chart, the little dotted lines. And you can get vertical and horizontal lines, or no lines at all, whatever, you know, there are some charting styles that having those vertical or horizontal lines can be really helpful. And this is the label window. And obviously, when you label the window, if you look here in the background on Ron's screen, he's got the label window on for the VPA flags and trends window, and then we stick the VPA text up there, and so you basically have two labels in the upper corner. And this is why I recommend on VPA charts unchecking that label window box so that you get more screen space on that one. Now on the volume, it doesn't really matter quite as much, but on this one, if he unchecks that, you can see how it brings that up. It basically gives you a few more pixels. For, you know, on a large screen, it doesn't make that big of a difference, but on a small screen, it can. Another handy feature that we've added in the last few months in the charting, if you hit F11, it'll full screen the chart, which on a laptop can be really useful.
I've got Snagit going, so
well, you can also, it's on the Tools menu. Go to Tools. No, leave Snagit. Snagit's fine.
Okay.
Go to Tools. No, not right click on the main menu, up on the Files, tool. No, there's not a button.
There's not a tools button?
The main menu, it says tools. Yes.
Oh, okay, this one, okay.
Yes, and then down toggle full screen.
Oh, okay, F11.
And it's F11. And notice how when you toggle full screen, it kills some of the annotations around the edge. It also will hide your Windows taskbar. And then if you hit F11 or go to the menu item again, it'll bring it back. It can be really useful on laptops because it'll give you a little bit more screen space.
Yeah, okay. Let's get through some of these other questions. Matt, ALJ says he wants to talk to somebody about some specific software questions. When you were offline, I said I'm thinking about doing a webinar, a series of webinars on just VPA, which I would have to charge for since I'm a user. But maybe George could help you with that. I'm really busy during the day. Maybe George could help you with that. How do you scan for VPA signals at the end of the day? Have you looked at any of the videos? There's a bunch of videos on the YouTube site about using VPA, but I'll show you in a second here. Sam Crow says keeping the word consistent days since the last signal should read days since the last flag. Yes, Sam, that would probably...
Well, no, actually, the warehouse is all signals, no flags. And so the field for it really is the days since the last VPA signal. But we've almost expanded VPA signal to be almost every flag. And so it's not quite got as heavy a meaning as it should, but it actually is correct. It is the VPA signal and the days since the VPA signal and not the flag.
Okay.
But
well, okay.
I'll admit, in hindsight, I think we would have never done the signal thing at all, and we would have just gone with flags and had all the flags, and you would have to deal with 26 of them all the time.
Okay, Bradley, let's see if I put some, I think I put something in here for
filtering on stopping volume. Some of the flags,
right here.
Some of the flags have been made into warehouse fields all by themselves, like stopping volume, and so you can bring up the filter for that.
Okay. Okay, Andy, thanks for listening. He has to go.
So as you can see, the second rule there, a VPA flag stopping volume equals yes, and so you can you can make a filter, and that runs on the last day of data, and it will even run interday. But you have to remember that the volume on an interday is whatever's accumulated up to that point you did the full update, and so. You know, before noon, I would say the signals are questionable at best.
Yeah.
And so that's how you basically can filter on. There's a bunch of the flags have been made into warehouse fields and filters.
Yes, Bradley. If you drop the group rank greater than 0, it would let ETFs through. Did I put? I've done so many things here I can't remember here. Or you could just make up a view and sort on the column for VPA signals. Let me get back to some of these here. Windows 10 does not affect this, Steve. I'm running Windows 10 on 5 computers, and I run HGSI on all of them. What about a filter? Am I filtering for flags or signals? The warehouse views, when you're filtering, Matt, you said those are all signals, right?
No. The days since last signal are all based on signals. Anything with the word signal in it is based on a signal. Anything with the word flag in it is based on a flag. Flags are the colored dots and shapes you see in the charting, and signals are days that have flags but also meet other criteria, such as the amount of volume, and in theory we could expand it to be even more picky. So signals are they're supposed to be a higher quality of flag. The flag is, this thing happened. The moving average and the volume was this high, so that's an interesting day. The idea behind it is that the signals are more significant. They have more restrictions, and they're a little pickier than the flags.
And there are multiple flags here. Let me go back to this.
Yeah, we've got a bunch of flags now, and we will probably add more of them.
I just put every flag in here for this demo screen. But here's a list of the flags that are available right now. Anyway, I mean, there's all kinds of, I put all kinds of stuff together for you. Under the HGSI volume price analysis, if you've downloaded the program recently, it's got this date on it, and every one of these are bullish or bearish signals under these folders, under this primary folder. This is how you screen for these signals. Now, this is all inclusive here, bullish VPA signals today, but if you want some specific, go down here to the number 2 folder, and these are all effort to rise. This is effort to rise the last 5 days, stocks and groups. Effort to rise last 5 days with a pocket pivot, 5 or 10 day. I added those later. That's why they're A and B. So, I mean, there's a ton of stuff. I've done so much stuff in here that I've forgotten what I put in here, to tell you the truth. But, I mean, I tried to cover most bases, and we will work with all this as time goes by. And that's why, you know, it almost requires a separate, several seminars actually, because, you know, we haven't been able, you can't get much done in an hour or two.
So one of the questions was about linear regression, whether we're going to have the 3 lines automatically plot on the chart. And the answer is yes, but I don't know when. It's on the list. You know, we upgraded the annotation tool so you can actually move annotations around, which you couldn't do before. And part of that was also going to include the ability to draw your own linear regression. So you pick the start and end date, and we draw the lines for you. But we decided to do the VPA stuff instead, actually, and I think we made the right call on that. But it's still on the list, and yes, we're going to do linear regression, so you'll be able to draw trend lines. Actually, you're not drawing a line; you're drawing trend start and end dates, and we'll compute the lines for you. It's on the list probably later this fall, I would think, at the rate we're going.
Okay, one more question. I don't know if this can be done. For Gary Rosen asked, can you allow folders to be set to different colors in the designer?
We're probably not going to go there. We're actually planning to add more smart group-like folders that will probably be yet another color, but I don't think we were ever planning to have users be able to do it. But one of the big features on our list is the ability for users to make their own user smart groups, although I think we're going to call it something different.
That would be wonderful.
But along with that, we might be able to accommodate some more coloring kinds of options. You know, we're trying to fold in as much group functionality as we can, which we did with this last release. So we have a lot of plans for this year. We've been setting a fairly rapid pace the last 6 months or so, and I don't see that slowing up anytime soon.
Don't tell me that, Matt. We better wrap it up. George says we're running out of time. So Anyway, George, are we doing this weekly?
Well, we have a
Or-
schedule for to cover the other 3 indicators through the rest of this month. So yes, next Wednesday, the following Wednesday, and the Wednesday after that.
Okay, and then I'm gone part of April. So, but anyway, we'll cover the VPA and we'll touch upon what we touched upon here and just add to it.
Sure.
Okay. Well, thank
Okay.
you for listening.
Thanks, everyone.
Thanks. Bye-bye.